Hello and welcome to the Mutual Fund Show. I'm Neeraj Shah. The next 20 odd minutes, we'll talk about, an interesting aspect in the mutual fund space, which is how to play or how to invest via the mutual fund route. If you believe that interest rates have peaked and you want to make the most of potential gains that would come in specific themes or the market as a result of this reversal of interest rates. That having said, there is always this constant topic of what to do with large cap funds. One large cap fund finishes 15 years of its existence today, that is Wednesday, and will speak to the head honcho of their asset house about what are the takeaways and what to do going ahead. As also, we'll request our other guest on the show, who is a veteran in the mutual fund industry, about what to do with large cap funds in general and maybe the Mirae fund in particular. So there I spill the beans. Our guests today, Swarup Mohanty of Mirae Asset Management and Gurmeet Chadha of Complete Circle. Both of them need no introduction, gentlemen. Thank you so much for taking the time out and being with us on the show. Swarup, while we'll talk about the large cap fund later, at the onset of this show, congratulations on 15 years.
Thank you so much, Neeraj. Thank you so much for having me on this show with this topic, and so special to do it with Gurmeet along with me. Really, it's a big moment for us, completing 15 years. When you start in 2008 with that backdrop, please keep that in mind. Never a great time to start business anywhere in the world in 2008, but from there to here has been a journey, and thank you so much for your wishes.
No, and I think Gurmeet will echo the same, because I think whatever little I've learned of his journey, for him to do whatever he's done and then start the business and make it so successful is kudos to him as well. Gurmeet, thank you for being on the show today.
Pleasure.
Okay, let's start off with the first topic, which is of wide interest, which is that if indeed what the RBI has said, or the RBI has done rather, and what people believe the global central bankers might start doing as well over the course of the next 6 months, does it warrant a change in investing patterns? And is there a mutual fund way to do it? Swarup, can I start with you on this?
Yeah, I think, I was very lucky that in the morning when we started this discussion in one of the channels to call out a pause possibility. And that was the house view that came about, that there was a genuine reason for a pause and did play out. But I personally believe that it's early to sort of call it yet. I think the RBI would like to wait and watch and take stock of everything that has happened or their actions, and that's what would be happening globally. I think let's face some facts that 3-4 months ago, when the globe had kind of concluded that the interest rates had kind of peaked out, a lot changed with the some of the bank news coming out on the contrary. So I do believe that the global data is still fragile, and it's always good to watch this space rather than jump into some conclusions very early. Let's wait for the next action of RBI and then form some opinion, is my take on the whole thing. But from investing perspective, we've always, as a country, been from the equity side, and I'll start with the equity side, very, very specific to market cap investing. Most of the portfolios are skewed between the market, large, mid, or small cap investing. And over the last 15 years of our journey, 12 years, we've been harping on the fact that beyond market cap, there are good thematic possibilities, primarily on two things, because one, you have to differentiate between a theme and a sector. A sector is a subset of a theme, and a theme grows over a period of time. So we've called out some themes. And at this moment, from an India perspective, we do believe that there is a lot of scope, and post PLI, the manufacturing theme comes into play, along with possibilities in say the healthcare as well as IT, which are probably at the bottom of some of the valuations. So if one can graduate to these opportunities which are there in front of you, a lot can be done through the satellite part of the portfolio to add that simple kicker to your core to enhance returns, is our house view.
Okay, so Swarup is saying, of course, viewers, that it's not a done deal as yet, and maybe wait for some more proof of the pudding before you start eating it. Now, Gurmeet, can I come to you? And your view can be different, of course. Do you sense that it's the time to play or preempt the possible long pause or a cut? And are you doing that via, I'm sure you might be doing it via stocks as well in your portfolio management service, but for the mutual fund route, how do you propose that, if you believe that's the way to go in the first place?
So Sudhir, my first view is I think we are probably in for a pause for a longer period of time than the cut playing out. The bond market might show that a little early, which it always does, whether it's US or India. And I think too many changes to the portfolio, because the cycles have shortened so much, can be a little counterproductive. Because I would rather, go with a fund manager who runs a flexi multi-cap approach, who has been good in reading trends. And since Swarup is there, I think Mirae has been one fund house which has been very consistent, in reading those trends. So I would go with fund managers who are right now, reducing maybe a bit of financials, because most of them were overweight financials by 30-35%. Are they increasing auto a little bit? Are they increasing energy? Are they increasing services? Are they increasing the consumer discretionary part? I've already seen some portfolios with almost 12% weightage to auto, about 10-11% weight to energy. So we are seeing that trend. So I would still prefer that the core portfolio should not be disturbed too much, unless there is something which is really eye-catching, and you think that somebody's really taken a bold call. So, for example, last year, again, quoting a fund, not a recommendation, SBI Contra took a call of going more to cash. They were only net long at 78%, and they went overboard on energy and utilities and underweight other sectors like IT and all, and paid off for them. That's one fund which is double digit. So unless something is of that call, which and the name is Contra, right? So you want to be a little contrarian to the market, right? So unless something is of that call, I don't think so it should be disturbed. The satellite portion, as Swarup also mentioned, so I think the core, which is 80-85%, should not be disturbed. The satellite portion, I think there could be something if you are a little more savvy, because the exit calls are important. You can't just buy and sit tight in a thematic or a sectoral fund. I think maybe an infra fund with a combination of a tech fund or something. If you're savvy and you have a view that capex cycle is going to play out, and but I would say at a portfolio level, check what is the weightage. If the weightage of capital goods, auto, tech, for example, which you think will do well, is already 30-35%, I don't think so you should incur that. There is a tax angle, there is a transaction cost angle. So I think just stay with the discipline, and maybe through a thematic side, if you want to do that and you are good at tracking it closely, maybe an infra or a digital fund can be added, but again a very small portion to the book.
Okay, thanks for that, Gurmeet. So both of our guests kind of echoing similar views. Now I'll play the devil's advocate. I'll come to Gurmeet after this question for some fund recommendations as well. But before that, Swarup, I would love to come to you. Since we talk about the satellite part of the portfolio, so let me ask you on that. I heard you mention that you would do, while you're waiting for the Reserve Bank of India's actions to confirm any thesis, you see some value, I believe, in select pockets like pharma, etc., that you mentioned. My question is for you, is there a lot of how do I say risk in allocating, say, for some money in a fund that you guys have run, which is a FANG fund or the 10 US stocks fund, right? Because typically, as Gurmeet was saying, that if interest rates were to turn in the US as well, tech, which got clobbered in 2022, might make a bit of a comeback. So my question is, one is optimally timing it at the right time, but since people can't do it, Swarup, can people kind of preempt some of that, even if it means that they might stay at the same levels on their NAVs for some period of time? So it could be tech, it could be BFSI in India, it could be infrastructure, real estate focused in India, what have you.
So first of all, I think I'll echo what Gurmeet said. Is this is the satellite part of the portfolio. Let's be very clear on that. Don't tinker with the core part of the portfolio, and to decide what is the core and satellite is something which you have to set as a goal first, right? And from the satellite, yes, obviously the satellite is meant to give you that kicker. So some of these preemptive calls can be done for informative investors. Don't go by hearsay. If you have some very good information and then you're able to preempt something on that, it's always advisable. If not, please do take the advice of a good advisor and take the step forward. But there is some merit to what you are saying, and it's always good to take that preemptive measure rather than after it's played out. Invariably, when you see mutual fund flows come after the 1 year performance of funds have happened. Is it possible to do it before that is what we are discussing. But yes, when interest rates do turn, and I do believe there is some time before there is fair amount of damage which has happened, and that needs to be recovered before all this can be discussed. At this moment, I will also agree with Gurmeet saying that this is a pause phase. And then once that pause phase is over, the reverse can happen. And when the reverse happens, why US tech? We will see some amount of impact on the Indian tech also, right? And that's where these kind of funds make a comeback. Now the question is, will you wait for that, or do you start allocating right now? I would feel a good SIP in these things, these kind of categories, including healthcare, would yield results for investors. But again, the caveat is within the tactical part of your allocation, which can give you an upside. The possibility is there. It is between now when the data is bad and when the data becomes good is the opportunity. When the data becomes good, trust me, the market will not give you an opportunity. So a good staggered buy could be a good option, is my opinion.
Got it. And viewers, remember, healthcare, what Swarup is recommending is I believe, a valuation-led call, not necessarily a turn of interest rate-led call. And I think they've been at the forefront in saying that they launched, I believe, the healthcare scheme just very, very recently in the last couple of years.
And in 4 years, it doubled money in 3 years.
Double money in 3 years, okay. And now we're starting to see, at least on the screen, you're starting to see in the last 1 month, a bit of a turn after the dismantling of sorts of healthcare valuations in the last 12 months. We're starting to see that turn. So very interesting. Thanks for that, Swarup. Gurmeet, to you now for the funds piece. Now let's assume that our viewer, she or he are okay with some bit of time lapse. They are agreeing that they'll do it in the satellite part of the portfolio, and that the time taken for this to start performing is variable, because it'll happen only post there is some definitive soundbite of some turn happening in rates, whether global or India. With all those disclaimers, Gurmeet, give us some options that people can keep in mind or start investing in. They could be a Mirae option, they could be a non-Mirae option, and they could completely be non-Mirae options. I'm sure Swarup won't mind.
True, absolutely.
Yeah, so so as I said, I would first give you something which can be added in the core if it's not there in the core, because that determines the it's the Pareto principle, right, Neeraj? So I think funds, there are few funds which have done very well. ICICI Multi-Cap, I think, is one fund where you have auto, services, tech, bit of pharma, higher than financials, it's just 23%, unlike normal funds. Mirae Focus, since Swarup is there, I like the top holding. They're all top holdings. So I obviously get fascinated by stocks in the underlying portfolio, and I will always recommend people, whenever you pick a focus fund, your view on the top 8-10 holding has to be, so for example, in Mirae Focus Fund, you have ICICI, HDFC Bank, Axis, SBI making 25-26% of the portfolio. Then you have Reliance, Bharti, and there is Syngene. So, I track. So in a focus fund, you have to be clear what you're buying and whether there is value there. So I think there is value in that focus fund in terms of, because most of the holdings are down 10-15%, in some cases more, despite the market probably clinching back to 17,700 right now. Satellite side, don't get too much carried away by tech. Nasdaq is already up 20%, by the way. So sometimes the news gets reflected in the price far more quickly than we think. So I think a nice combination of infrastructure fund. I like one infrastructure fund of IDFC because it's a pure infra fund. It doesn't have any bank. It doesn't have any quasi, infra play. It's basically physical and digital infrastructure, which is L&T, ABB, the Siemens, Bharti, which is for digital infra, right? Pure power, the power and the utilities play. And you can top it up with a digital fund or a healthcare fund. I think both places there is value. I think the way healthcare has been clobbered in last 2 years, probably the valuations probably say that there'll be no diseases in the globe going forward, right? So if you look at the weightage, Neeraj, the overall weightage of pharma in the index is 4%. I mean, globally, it's about 11-12%, right? All pharma companies today are less than HDFC Bank market cap, right, in terms of market valuation. So I think there is value there, and a lot of the things on branded generics, on APIs will start reversing, which is destocking, which is raw material prices, contract repricing in API space, right? So I think there is value there. So I think a combination of infra, and you can choose if you can hold for a little longer, some pain in pharma, maybe a healthcare would probably give you more risk reward. And if you are more in the camp of visible earnings growth. Maybe tech probably offers you more visible, because there are cash flows there. The stocks are already down 20-25%. You may not see much. So to me, it is infra should be definitely be there. I think there is a capex cycle playing out. You can look at IDFC infra there, and between a tech and a healthcare, you can choose one. For more long, if you are happy with backdated returns, maybe pharma. Something if you want a little more moderate play, I think maybe tech.
Okay, that helps. So that's the long and short, viewers. You got a fair sense, viewers, I hope, with this, that there is an argument that I was making about how to play a possible reversal in rates. Both our experts believe that don't do it via the core portfolio, do it via the satellite part of the portfolio, and don't bet on, yeah, maybe milestone the returns, don't time the returns, because when the turn happens, it's very, very difficult to call out. So that takes care of a key topic that a lot of people have written to us about. And hopefully this conversation, either if you're listening to this or if you're reading about it, would help you. Now, the second part, which is this constant talk of large cap funds and what they could do over the medium term, and should you choose something else. Now, here's an example of a large cap fund, which over the last 15 years, as it completes 15 years today, has had an exceptional delivery of returns, and that is from the Mirae stable. Now, Swarup, once again, congrats on 15 years. It's a milestone event for sure. Tell us, what kind of investors would a large cap fund in general be suited towards, and where do you think your large cap fund lies, and what kind of investors should apply for it? What are the kind of returns that people should anticipate from such a fund?
You see, first of all, thank you so much for calling the funds 15 years out. It's been a very special fund for us, and I'm so proud to be representing the fund in the market. Now, when you look at the track record has played out itself, and I would really request investors to check them out themselves. I think what has stood out for me for the fund is the consistency which it had bought. I think the last 1 year we've seen a very different kind of a scenario in the market. Today, the erstwhile value looks like growth, and the erstwhile growth looks like value. So one has to keep that in perspective when you are, assessing funds like ours in the market. But if you keep that 1 year aside, the fund has consistently been a benchmark beating fund. But apart from that, it has always added investors all the years around, and this year also it continues to add investors. 10,000 rupees 15 years ago is around 76,000 odd. That's the wealth it has created. So it's done a fair amount of journey. Yes, the debate of large cap versus the other caps is burning, and rightfully so. Once markets mature, it is the large cap which come under the scanner for alpha generation or benchmark meeting, and probably not us. All large caps are going through that cycle. But here's the thing, and that's been the house view post-COVID. We have felt that it is always advantageous large companies, it is advantageous large balance sheets with cash to withstand the damage of COVID. And we believe that a lot of mid and small balance sheets will be tested, and there will be a fair amount of consolidation in the market. You pick up any sector, the top 5 companies would have added to market share. And then look at the way the FI selling has happened. And at this moment, and Gurmeet will echo in what I say, is that the Indian data in our careers has not been as strong as what we are seeing now. And when the dust sort of settles and the reversal of money comes, the money will buy the top 50 stocks. That's the nature of that money. So from a risk reward perspective, we've been always favoring large caps, and it's a core portfolio catering to all possible investors across the country. Whether they buy Mirae Asset large cap or any other large cap is a separate issue. But the large cap per se at this moment does have merit in the possibility of a good upside on the rebound of this money. And trust me, the Indian data is so strong that when the dust settles, the money will reverse, and it will reverse to Nifty 50 stocks.
Okay, thanks for that, Swarup. Gurmeet, what kind of investors do you recommend should look at a large cap fund in general, or a fund like the Mirae Large Cap, for example, in particular? I mean, what kind of returns should they anticipate as well? So one, both on the nature of the investors who should go for a scheme like that, and two, the plausible returns that one can expect, say, over the next 5 years or 10 years?
So, first up, let me congratulate Swarup. I think 15 years, 7.5, 8 times is a job well done. And this also bursts the myth that large funds cannot deliver. I think a large fund can deliver if managed well. Lot of us stay too much focus on what to pick. We don't pay too much focus on how much to pick and for how long, right? So it's the size of the picking also which matters. Which is where Mirae has done well in large cap, in particular with the sizing they do in the picks they like. And you'll see a lot of stocks at 8, 9, 10% in the portfolio, Neeraj, when you look at the portfolio fact sheet. And that explains why it has done better than benchmark. And most of the large caps have struggled. I think large caps are good for beginners. If you're making an entry into the market, I think you want more stability, and they're more predictable. These are more known companies. They're top 100 companies by market cap as per the regulatory definition. The fund has to invest majority of the portfolio there. I think the nominal GDP growth is where your expectation should be in large cap. I think India should still continue to grow at 11-12% nominal GDP growth, 6-7% GDP, around 4-5% inflation. And I think large cap funds historically have been able to mirror that over long periods. So since we are discussing Mirae, if you see Mirae 5-year returns, it's around 11%. Right? 3-year returns obviously would have a COVID base impact. If you look at 10-year returns, it's actually about 15-16%, and that's because of the alpha. But if you take normalized returns, it would be mirroring the nominal GDP. I'm more in the camp that you should have both passive and active. I think this debate is overstretched in my view. There will be periods where active will do well. There have been periods where passive has done well in last 3 years. So maybe a Nifty 50 fund or a large cap, both can be considered. Maybe one passive, one active. Secondly, I think the qualitative side, Neeraj, I think that, you should also have few styles. We discuss so much data, so much alpha, so much standard deviation. There is the qualitative side of the portfolio, which is having different styles. Every year there is a different fund manager who does well. It was Motilal in 2017. It was Axis in 18-19. Mirae relatively has been more consistent. It was Parag Parekh some time back, right? So every time, there will be, you can't keep changing every 1-2 year. It's like then catching, so the last bogie of the train can't be replaced. Somebody will be the last bogie always, but the bogie can change, right? We see how engines change when various stations come. So have also some styles in the portfolio. I think this going after alpha every 1 year performance can be very counterproductive.
Okay. Well, gentlemen, on that note, thank you so much for joining in and explaining in detail a key portion of what everybody's minds is clouded with, which is the rate reversal and what to do there. And of course, Swarup, once again, from me, Gurmeet, I'm sure, and everybody who's produced the Mutual Fund Show and our viewers, congratulations to you and Team Mirae for 15 splendid years. And may you do better than that in the next 15.
No, Neeraj, thank you so much for saying that. Through your channel, I'd like to thank all the investors and all our partners for standing by us. It's not been as an easy journey, but standing by us more during our lows of the journey. And thank you, really appreciate all of you. And really, it's a special thing to complete 15 years in India.
All the best. It's evident, and may the good times continue. Gurmeet, thank you for taking the time out of being on the show as well. And viewers, more importantly, thank you for being a part of this Mutual Fund Show.